Previously, Bitcoin halvings were counted as one of the most bullish events in the crypto space for Bitcoin. The next halving is supposed to occur in April 2024, which is just a few months away from now. Should we expect things to play out similarly to the previous market cycles? In this video, you will hear some facts about Bitcoin halving that you probably haven't heard before. Stay tuned. Hello everyone, Happy New Year and I wish you all the best in 2024. Welcome back to Crypto Grid channel, my name is Željko and today I'm excited to share some unique perspective on Bitcoin halving. So firstly, what is Bitcoin halving? It's an event that happens roughly every 4 years where the reward for mining new Bitcoins is cut in half. This mechanism controls the supply of Bitcoin and is a crucial part of its value proposition for Bitcoin as well. But why does this matter so much? Bitcoin was designed with a maximum supply of 21 million coins. The halving is a built-in feature that reduces the rate at which new Bitcoins are created. Initially, miners that validated transactions and secured the network were rewarded with 50 Bitcoins per block, but after each halving this reward is cut in half. So, the rewards for 25 Bitcoins per block, 12.5 Bitcoins per block, last time it was 6.25, and so on. It's all about scarcity. By reducing the flow of new Bitcoins, halving events make existing Bitcoins more scarce. This scarcity has historically affected Bitcoin's price. After past halvings, we've seen a substantial price increase each time. So, the halving is not just a technical event, it has a real-world implications for investors, miners, and the entire cryptocurrency market. But there is more to it that meets the eye. Let's explore the untold aspects of this phenomenon. One of the things that nobody speaks about when it comes to Bitcoin halving is the actual issuance rate of Bitcoin. The issuance rate means how many Bitcoins actually go into circulation each year. So, if you look into this sheet, we can see that this number already decreased a lot to around 4% in 2016. If you look at it currently, it's 1.7% dropping to 0.83% with over 90% of Bitcoin already in circulation. So if you look at the issuance rate, especially this year, this number is insignificant in comparison to the demand that can be created. If you look just at this year, at the start, the market cap of Bitcoin was slightly under 320 billion, and just recently we had it above 850 billion. So that's like 2.65x in less than a year. Also, people are looking for altcoins and expecting even larger ones to heavily outperform BTC, while some of them have issuance rate over 10% yearly, so obviously at the current market cap this isn't a big issue. I always like to take XRP Ripple for example, since its supply increases 10 to 11% per year, which is a lot. Yeah, its market cap is around 25 times smaller than BTC, which is a lot, but if you think how many coins are added to the market cap, it dilutes the value of each coin a lot over a longer period of time. Imagine if you look at some alts whose issuance rates double each year, or if they start small as some layer 2s for example, that's releasing like 10 to 20% of coins in circulation at the start when they are launching. They get heavily diluted once more tokens are released into circulation. If you look into the charts and halving days, the thing that we can notice is that we are pretty close to halving, almost 100 days away. And one thing to have in mind is that during the last halving, 61 days before the halving, we had a large pullback. It was due to the spreading of the virus, but still we don't know if something like that will happen. If we look into another thing, and that's when the Bitcoin price actually reaches its peak, it's usually around 550 days after the halving, so it's usually a year and a half after it. So this is the date range when we could expect to reach the market top. This happened in the last bull market and the similar thing happened in the bull market before the last one. Besides the timing, another way that we should look at when it comes to the Bitcoin halving is actual price of Bitcoin. And I like to look at the two ways. One way is to look from the bottom of the market to the top of the market, which was 21x last time. The bull market before that, it was like almost 1300%, which is almost 130x. And another way to look at it is from the previous market top to the current market top. And last time we had around 250% jump from around 20k to around 70k, slightly under it. And in the previous market cycle, we had around 16x up from one market top to another market top. So if history would repeat and we expect some diminishing returns, we could expect this price to go around 2x, or we could expect to have like 10x from the bottom or something in that range. Also from the other side, this doesn't necessarily need to mean anything, because we can have some kind of super cycle and we might have like prolonged ranging markets, but that would probably mean that we either go slightly down then up or something like that, and that would mean that we would reach the market top later, but the market top would probably be higher if that happens. Still, this is something that nobody can predict, and this is the reason why I always tell to people that they should always have some Bitcoin and they should always have some cash to take advantages whether the market goes up or down. So even in the past, a price increase was correlated more with other macro things that would increase the demand for Bitcoin, and it was only a coincidence that the Bitcoin price peaked 18 months after the halving last two times. As time goes on, we're gonna have a better regulatory environment with fewer scams, which will increase the market share of crypto, blockchain in comparison to other asset classes as well, in my opinion. A good example for that is spot Bitcoin ETF approval, which is expected to happen in the next few days, which should probably lead to increased exposure to BTC for more investors. And if we compare the market cap of the stock market, which is like 100 trillion, and crypto total market cap, which is around 1.65 trillion currently, we can see that there is a huge room for growth. Imagine if you add 5 trillions to both markets, that's like 3x for crypto, while it's only 5% for the stock market. Also, a great example of an increased demand is increase in Solana price, which went from below $8 to almost $120, which is 15x. This just shows when something has good fundamentals and a positive macro environment, its demand can increase a lot, despite the talks that FTX have a lot of Solana, which will be released on the market and sold as well. And this is actually the bigger impact for Bitcoin, in my opinion, as well, than just the issuance rate and the halving itself. The thing that is actually the most bullish regarding the halving is the amount of Bitcoin on exchanges. We can see that supply is consistently contracting while the demand is either consistent, either increasing. So I feel that the actual most bullish thing for Bitcoin is the moment when some big player like BlackRock comes into space, and there aren't players from the other side that are willing to sell their BTC over the counter without affecting the Bitcoin price, and there isn't supply to be bought on exchanges either. Also, as time goes on, we can see more players like Sailor that are consistently accumulating their BTC, reducing the total supply available as well. So yeah, overall halving is definitely a bullish event, and the limited market cap of 21 million and a lot of coins that have already been lost. But an increase in demand is the thing that will push the price heavily up, and it's the main thing that we should look for. So I wish you all the best in the new year again. I hope that the video was helpful. If you like it, please consider subscribing. Also, if you have any questions, leave them in the comment section below. Thank you for watching. Stay strong and healthy. Bye.